Lana Moreau never fit the mold. She was too sharp to be ignored, too hungry to be satisfied, and too clever to play by the rules others followed. Born and raised in a fading two-bedroom apartment above a shuttered laundromat in Newark, New Jersey, she grew up in the shadow of bankruptcy notices and second-hand shame. Her mother, once a high school math teacher, now worked nights cleaning medical offices. Her father? He was a ghost Lana never met, just a faded photo and a name she stopped asking about at age 7. Lana didn't need pity. She needed escape. From a young age, numbers fascinated her, not in the traditional, classroom sense, but in their power to change reality. A few digits typed into the right place could mean rent paid or lights turned back on. By 13, she was selling homework to wealthier students. By 16, she was building simple mobile apps and selling them under fake names. College wasn't an option. Debt terrified her, and the thought of 4 more years in a system she didn't trust made her nauseous. Instead, she immersed herself in online courses, forums, and freelance gigs, slowly teaching herself everything from Python programming to blockchain development. At 22, she worked out of a dusty co-working space in downtown Jersey City, bouncing between freelance coding jobs and failed startup ideas. She had no money, but she had vision, and a grudge against the world that kept locking doors in her face. Then came Valera. It started as a joke. A secure, anonymous digital wallet for the modern rebel. She pitched it sarcastically in a Reddit comment thread about financial censorship. But something about the idea stuck. The world was ripe for disruption. Banks were slow. Regulations were suffocating. Crypto was booming again. People wanted to believe in the next big thing, especially something that promised freedom, privacy, and control. The rebellion was marketable now. Lana knew she didn't need a real product, not yet. She needed belief. Belief was leverage. She drafted a mock-up of the Valera app overnight, sleek, modern, secure-sounding. She borrowed UI elements from other open-source wallets, edited the interface in Figma, and inserted fake balance snapshots into a simulated dashboard. To the untrained eye, it looked legitimate. Next came the pitch deck, pages of buzzwords and graphs showing exponential growth, all wrapped in the confident voice of a visionary. Lana uploaded it to Angel Deck, a new platform where early-stage founders could pitch to accredited investors. She used a fake last name, Lana Voss, and a made-up advisory board, complete with stolen LinkedIn photos and renamed bios. Her resume? A fabricated history of internships at fintech firms that didn't exist anymore. She didn't expect much. So when an email landed in her inbox with the subject line, "Let's talk, potential investment in Valera," her hands trembled. The investor, Rory Franklin, was a retired hedge fund analyst with money to burn and a history of high-risk, high-reward investments. They met over Zoom the next day. Rory was in his late 50s, half-bald, wearing a Patagonia fleece in what looked like a wine cellar. He grilled her on security protocols, encryption layers, transaction speeds. Lana didn't flinch, she threw back just enough jargon to dazzle without revealing anything. "I like your confidence," Rory finally said. "And I believe the market's ripe. I'll wire you $100,000 by the end of the week." Lana muted her mic, screamed silently into a pillow, then turned back with a smile. "I won't let you down." She didn't spend the money building anything. Instead, she spent it building the illusion of something real. She hired a designer from Ukraine to flesh out the app interface. She paid a Fiverr actor to voice over a demo video. She bought ads targeting crypto forums and libertarian influencers. She rented a small, glass-walled office in a Manhattan co-working hub and hired 2 marketing interns from Craigslist who thought they were working for equity. By the end of the month, Valera had a website, a waitlist of 4,000 users, and a growing whisper of hype. People wanted in. Another investor followed, this time a VC microfund that wired $250,000 after a staged demo. Lana was now running a company that didn't exist, raising money for a product that didn't work, selling a vision she knew she could never deliver. But for the first time in her life, she mattered. She often stared at herself in the mirror of the co-working bathroom. Was she a fraud? She told herself, not yet. She told herself she'd build it eventually. She just needed more time. More money. More people. If she could just scale fast enough, maybe she could hire real developers to finish the back end. Maybe it could become real. The line between fraud and ambition was paper thin. But each day, that line moved further away. One morning, she walked into the office to find a young man sitting at her desk. He looked about 19, nervous, with a laptop open and a spreadsheet on the screen. "Hi," he said quickly, standing up. "I'm Kai. You posted on the Slack channel that you needed a data intern. I applied last week." Lana blinked. She had no memory of this. But she smiled, adjusted her tone, and said, "Right. Kai. Yes. Welcome aboard." He was eager, smart, and didn't ask questions. He spent his days building customer lists and updating dashboards that meant nothing. But 3 days in, he sent her a message. "Hey Lana, I noticed the Blockchain Explorer isn't showing any real transactions on the wallet address listed in the demo. Should I be pulling data from a different source?" She didn't respond for 2 hours. Then she replied. "That's a staging address for demo purposes. Real traffic's routed through a private node. NDA level stuff. Good catch though." Kai replied with a thumbs up emoji. But Lana's heart had skipped a beat. People were watching closer now. The story she'd spun was gaining eyes, and the eyes meant danger. Still, the investors kept coming. Some wired $20,000, others $200,000. Lana used the new funds to pay old freelancers, print swag for a crypto expo, and buy time. Always time. She now had nearly $600,000 under her control. But the more she grew, the more brittle everything became. One bad tweet, one sharp question, one broken NDA, and it could all collapse. But Lana didn't care. She had a new target in mind. She was going to cross $2 million. And disappear. The key to a believable lie isn't perfection, it's plausibility. Lana Moreau knew that better than most. Perfection raised suspicion. Real startups were messy, glitchy, and delayed. So Valera became exactly that, just credible enough to be real, just buggy enough to be believable. With over $500,000 in her business account, Lana didn't start hiring engineers. She hired optics. A copywriter in Berlin crafted blog posts about blockchain privacy and fintech ethics under Lana's name. A social media manager in Brazil made daily posts on X, LinkedIn, and Discord. She commissioned Medium articles praising Valera's mission of financial sovereignty, all under fake accounts. And she signed up to speak on podcasts, under aliases and voice modulators, of course. One guest appearance on Crypto Rebels Weekly went viral. Listeners raved about the brilliant, mysterious founder, who was reshaping the digital economy. Valera's waitlist jumped to 18,000 in 2 weeks. But underneath the marketing tornado, the codebase was barely a skeleton. A freelance developer named Murat, based in Istanbul, was tasked with creating a clickable prototype. He had no access to company funds, user data, or the illusion of scale Lana had built. His job was simple, make it look functional. Button clicks triggered animations. The send function displayed a fake transaction hash. The security screen showed AES-256 encryption, in progress. It worked. The demo looked real enough to trick investors. The dashboard even simulated daily transactions and growing user balances. But there was no back end. No blockchain. No ledger. No real product. Only smoke. Meanwhile, Lana built a company culture out of vapor. Her interns believed they were working for a cause. Lana encouraged open dialogue, shared inspirational startup memes, and praised hustle. She hosted weekly Zoom town halls with pixelated charts and vague roadmaps. She spoke like a founder under pressure but full of conviction. Privacy isn't just a feature, she told them one day. It's a right. And we're building something that scares the banks, and that's why we have to move carefully. They believed her. Even Kai. He'd stopped asking about transactions. He now handled growth metrics and user segmentation. Lana gave him head of data on LinkedIn and bought him a new MacBook as a reward. He glowed with pride. But suspicion was starting to swirl from the outside. An investor named Derek Hahn, who'd wired $150,000 2 months prior, began pushing harder for access. Need a private walkthrough of the tech. Our board is asking questions, he wrote in an email. Your next round depends on this. Lana didn't panic. She adjusted. She set up a Zoom demo, pre-recorded, but timed perfectly. She narrated over it, answering fake, live questions while the app simulated transactions on screen. The walkthrough ended with Derek visibly impressed. I'll be in touch, he said. 3 days later, he sent a follow-up. I ran this by our security advisor. A few things didn't line up. Can we get access to your CTO? Lana replied. Our CTO's on medical leave. Diagnosed with lymphoma last week. I'd prefer not to burden him with calls right now. Hope you understand. Sympathy stalled him. For now. But it was a reminder, her web was widening, and thinning at the edges. To protect herself, Lana began fragmenting the fraud. She registered 5 shell companies across different countries, Belize, Panama, Seychelles, Latvia, and the Cayman Islands. Each one was set up with different names, each one routed through layers of nominee directors and offshore agents. Money from new investors was routed through these entities, disguised as consulting fees, infrastructure contracts, or R&D grants. The funds were then split and moved into crypto wallets under different aliases, scattered across exchanges in Asia, Eastern Europe, and the Caribbean. She even bought identities. Real ones. A darknet vendor provided her with stolen KYC documents for fake directors, passports, utility bills, even selfie verification photos. She used them to open bank accounts under different names. By the end of the quarter, she'd moved over $1.2 million through a maze of accounts with no clear origin. It was elegant. Dangerous. Addictive. And no one, not even her employees, knew. Then came Zahara Green. She was a crypto journalist with a reputation for sniffing out scams. Young, sharp, relentless. Her stories had taken down token pump-and-dump rings and NFT fraud schemes. And now, she'd been quietly collecting data on Valera. It started with a DM to Kai. Hey, I'm researching an article about fast-scaling fintech startups in the privacy sector. Can we talk about your work at Valera? Kai, flattered and naive, replied immediately. They met in person. Twice. He mentioned the founder's brilliance, her vision, her relentless focus on user protection. But when Zahara asked for product screenshots or blockchain addresses, he hesitated. She says it's routed through private nodes, he told her. I guess for security reasons. That was enough to hook Zahara's curiosity. She began digging. Meanwhile, Lana had her eyes on a new target, Silvercrest Ventures, a boutique VC with a history of overpaying for visionary startups. They were known to move fast when they sensed momentum, and Lana had spent the last month crafting momentum. She set up fake traction reports, monthly active users, 60% growth rate, a chart showing a near vertical spike. She listed fake partnership deals with minor crypto projects, all propped up by forged PDFs and spoofed emails. Silvercrest took the bait. After a single demo call and a carefully choreographed team meeting, they agreed to invest $500,000 with an option to lead the next round. Lana smiled politely on the call. But when the wire cleared, she sat alone in her high-rise Airbnb, barefoot on the balcony, staring at the skyline, clutching a glass of champagne. $1.75 million. She was almost there. But cracks were forming faster now. A week later, she received an anonymous email. Subject: you don't know what you've started. Your shell companies are registered to IPs linked to your old freelance accounts. You're not as hidden as you think. Tick, tock. Z. She froze. No threats. No demands. Just awareness. That was worse. It was Zahara. It had to be. Lana pulled her team into lockdown mode. She told them regulators were sniffing around due to privacy policy violations. She restricted access, deleted Slack channels, and archived all sensitive documents. She encrypted everything else. Kai tried to ask questions. She shut him down with a smile and said, "This is just how war rooms work. It's a startup. You'll get used to it." He didn't believe her. Late one night, Lana logged into one of her burner laptops and began preparing exit scenarios. She mapped 4 escape routes. 1. Colombia via Panama. 2. Turkey via Malta. 3. South Africa via Nairobi. 4. The Philippines via Singapore. She already had passports for 3 of those identities. The 4th was being expedited through a contact in Bangkok. If anything went wrong, she could vanish in under 12 hours. But she wasn't ready to disappear just yet. Not until she crossed the line. Not until the $2 million was hers. Every great illusion is layered. You don't just make people believe in something that isn't there, you make them believe in something they need to exist. That's what Lana Moreau had mastered. Valera wasn't just a fake product. It was an idea people wanted to be real. Investors, users, employees, they weren't just buying into technology. They were buying freedom, rebellion, status. She hadn't named Lana directly, but the damage was immediate. Former interns began tweeting. Investors started demanding audits. Tech blogs began digging deeper. And worst of all, someone in Lana's own team had leaked her real name. The walls began collapsing fast. Derek Hahn demanded immediate access to the app's back-end infrastructure. Max Brenner froze his transfer mid-route. The Cayman Bank flagged Lana's holding company as high-risk and requested documentation she didn't have. Then, a call from Kai. He sounded shaken. Zahara called me. She said she knows everything. I didn't tell her your name, I swear. But she has emails. Screenshots. Lana tried to keep calm. Did you send her anything? No. But Lana. I think you need to talk to a lawyer. Lana hung up without saying goodbye. And Lana gave them exactly what they wanted. But to stay ahead, she had to keep the illusion moving. And that meant money. Real money. By now, Lana had crossed $1.75 million in investment. But it wasn't enough. The moment she stopped raising was the moment questions started. Silence was fatal. Growth was armor. So she prepared her final campaign, a polished, limited-access investment opportunity for insiders only. The pitch? Valera was entering the next phase, going from beta into closed enterprise partnerships. She created a fake deal with a Dubai-based fintech firm called Al Noor Exchange, just real enough to verify with a superficial search. She fabricated NDAs, press materials, and letters of intent. Then she crafted the bait. We're offering $500,000 in safes to select backers, at a valuation cap of $20 million. First come, first served. Deal closes in 5 days. 3 responses came within 36 hours. One of them, an overconfident crypto VC named Max Brenner, wired the full $500,000 without so much as a phone call. His only demand was a signed term sheet. Lana obliged, with a doctored template she'd used 4 times before. With that transfer, she crossed the $2 million line. She'd done it. But there was no celebration this time. No wine. No quiet rooftop victory. Only dread. Because on the same day Max wired the money, Sahara Green published her article. Ghost Code, The Valera Illusion. How a fake startup raised millions on the promise of privacy, and delivered nothing. It spread like fire. She hadn't named Lana directly, but the damage was immediate. Former interns began tweeting. Investors started demanding audits. Tech blogs began digging deeper. And worst of all, someone in Lana's own team had leaked her real name. The walls began collapsing fast. Derek Han demanded immediate access to the app's back-end infrastructure. Max Brenner froze his transfer mid-route. The Cayman Bank flagged Lana's holding company as high-risk and requested documentation she didn't have. Then, a call from Kai. He sounded shaken. Sahara called me. She said she knows everything. I didn't tell her your name, I swear. But she has emails. Screenshots. Lana tried to keep calm. Did you send her anything? No. But Lana. I think you need to talk to a lawyer. Lana hung up without saying goodbye. She checked the funds. She had access to just under $1.92 million, the rest was either in limbo or frozen in the banking system. She transferred $1 million to 3 wallets across 3 different blockchains. The rest was broken down into $10,000 to $20,000 transactions and distributed to satellite wallets, shell companies, and cash-out exchanges. She burned her SIM cards. Wiped devices. Destroyed the prototype laptops. By morning, the Valera office was empty. No trace. She'd disappeared. But she wasn't gone. Lana had booked a private charter to Cartagena under a false identity, Clara DuPont, a Canadian marketing consultant. She wore a black wig, oversized sunglasses, and carried no electronics. In her purse, a USB drive with the keys to 8 crypto wallets and a fake birth certificate. In her suitcase, $40,000 in cash. The private terminal was nearly empty. Security was light. Until it wasn't. A voice called out behind her. Ms. Moreau. She turned. Slowly. 2 men in suits. Not security. Not police. Interpol. In the chaos that followed, they found 3 things. 1. A flight manifest listing Clara DuPont under a Canadian passport stolen in 2023. 2. A USB drive containing 67 crypto wallet addresses linked to illicit investment flows. 3. A burner phone that had, only 24 hours earlier, pinged a cell tower near Max Brenner's VC office. The evidence was damning. But Lana wasn't broken. In interrogation, she said only this. I never lied. They chose to believe. Back in New York, the fallout was biblical. The VC firms issued public statements of regret. Interns lawyered up. Former investors went on podcasts calling Lana a narcissistic genius and the female Madoff. And Sahara Green. She was offered a book deal. But not everything was recovered. Of the $2 million raised, only about $1.1 million was tracked and frozen. The rest had vanished into offshore chains, burner wallets, cold storage keys, and obfuscated transactions. Some suspected it was gone forever. Others suspected Lana had help. But one detail gnawed at authorities. A single Ethereum wallet, inactive since the first month of Valera's funding, suddenly received a transfer of 0.01 ETH exactly 22 days after Lana's arrest. The transaction note simply read. Not done yet.